Advanced Micro Devices Inc., or AMD, is currently trading live at $300 as of 6:25 a.m. ET on April 23, 2026, marking a substantial intraday move of 5.45% upward from its previous levels. While many retail traders are focused on the round number milestone and the excitement of a $300 price tag, the real development that most people are overlooking is a significant shift in institutional block trading patterns over the last 48 hours. We are seeing a divergence where the broader semiconductor sector is feeling the weight of supply chain normalization, yet AMD is attracting aggressive accumulation from large-scale funds that seem to be front-running a massive enterprise AI refresh cycle. This isn't just about consumer laptops or gaming consoles anymore. The expectation is that AMD is merely a runner-up to other giants, but the reality is that their server-side market share is eating into territory that was once considered untouchable. The narrative surrounding AMD stock for years has been that it is the scrappy underdog, forever in the shadow of NVIDIA stock and fighting for scraps in the data center space. Investors often look at the high PE ratio and assume the stock is overextended, especially when comparing it to traditional value plays found on various investing sites. However, the common belief that AMD is just a high beta play on the AI sector is being challenged by the sheer consistency of their EPYC processor adoption. While most people are watching the flashy consumer benchmarks, the big institutional players are looking at the total cost of ownership for cloud providers. The reality is that the new MI440X architecture is performing in ways that are forcing a total reevaluation of how we view the competitive landscape. When you look at the recent stock movement, the daily swings have been intense. Just yesterday, we saw the price climb over 6% on volume that was nearly double the 30-day average. This kind of movement usually suggests that it isn't just retail traders on a Robinhood app buying fractional shares. It is the result of systematic institutional activity. We are seeing large buy orders being executed through sophisticated platforms like Interactive Brokers and Fidelity, where the execution speed and depth of the order book matter. These institutions are positioning themselves ahead of the next round of earnings, likely betting that the guidance for the back half of 2026 will surprise to the upside. The macroeconomic pressures of 2026, including fluctuating interest rates and a more cautious consumer, have sent many investors towards safer havens, yet AMD is acting like a defensive growth play because its revenue streams are becoming so heavily weighted toward non-discretionary enterprise spending. Institutional activity is the lifeblood of a sustained move like the one we are seeing today. Unlike the volatile spikes often associated with social media trends, this climb toward $300 feels structured. The trading volumes indicate that the supply of shares at lower levels has been effectively absorbed. If you are using a Fidelity trading platform or checking your holdings on the Robinhood app, you might notice that the bid-ask spreads have remained remarkably tight despite the high volatility, which is a hallmark of a healthy liquid market. This momentum is also being fueled by a rotation out of lagging software companies and into the hardware providers that actually power the infrastructure. There is a growing realization that even the most advanced AI software is useless without the silicon to run it, and AMD is one of the very few companies with a proven track record of delivering that silicon at scale. For those who are newer to the company, it's worth looking at how they got here. AMD operates on a fabless business model, meaning they design the chips but outsource the actual manufacturing to specialized foundries. This allows them to stay lean and focus their research and development on architecture rather than the massive capital expenditures required to build and maintain semiconductor plants. They have spent the last several years refining their chiplet design, which was a brilliant move that allowed them to mix and scale different components of a processor more efficiently than their competitors. This strategy paid off immensely in the server market, where their EPYC chips have consistently outperformed the industry standard in terms of energy efficiency and raw core count. In the past, AMD was often plagued with inconsistent execution and debt, but those days are long gone. Today, the balance sheet is robust and the focus is squarely on high-margin data center and enterprise solutions. If you are managing your own portfolio through a SoFi active investing account or using a SoFi robo-advisor, you have likely seen the sector-wide impact of these developments. The older reports from 2024 and 2025 showed a company in transition, but the 2026 data reflects a company that has fully arrived at the top tier of the tech hierarchy. Their acquisitions in the networking and software space have allowed them to offer a full-stack solution, which is critical when competing for massive contracts with cloud giants. This is why the stock is no longer just a gaming play. It is a fundamental building block of the global digital infrastructure. Looking ahead, the future outlook for AMD stock depends on a few critical catalysts. First is the continued rollout of their next-generation AI accelerators. If they can continue to close the software gap, which has historically been a weak point, they could see an even greater influx of capital from those using professional Fidelity wealth management services or independent online investing strategies.
The risk, of course, remains in the geopolitical landscape and the potential for a slowdown in capital expenditure from the big five tech spenders. However, the tension between the expectation of a cyclical peak and the reality of a sustained structural shift in computing power is what will continue to drive the stock's valuation. At this point, I want to hear from you. Comment below how many shares of AMD stock you currently hold and whether you think the current valuation is sustainable in the long term. Are you holding for the long haul in a Fidelity IRA, or are you actively trading the swings on a Robinhood cash management account? The engagement in the comments helps us all get a better sense of where the collective market sentiment is sitting versus the cold hard numbers we see on the screens. As we wrap this up, the central insight here is that AMD is successfully navigating the transition from a specialized component maker to a diversified platform provider. The expectation was that the stock might consolidate or even pull back as it approached previous highs, but the reality is that the demand for high-performance computing is outpacing the market's cautious predictions. We have seen a significant gap between what the average investor expects in terms of growth and what the institutional data is actually showing. Whether you are using a self-investing approach through interactive brokers or seeking investment help from a more traditional individual brokerage, the trend in AMD is a perfect example of why deep analysis matters more than just following the headlines. The authority in this space belongs to those who look beyond the live price and understand the underlying shifts in how technology is being built and bought. The contrast between the market's initial hesitation and the current aggressive buying at $300 reveals a stock that is finally being valued for its long-term strategic position rather than just its quarterly earnings beats. As we move further into 2026, the catalysts for AMD are clearly lined up, from enterprise refreshes to the expansion of their AI footprint. While risks like supply chain disruptions or sudden shifts in tech spending are always present, the reality of AMD's execution over the last several years has consistently exceeded the market's expectations, and that is exactly why the stock continues to demand such high levels of attention from every corner of the investing world. From the casual user on the Robinhood app to the professional managing Fidelity ETFs, the story of AMD remains one of the most compelling narratives in the modern market. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.